Hi and welcome back. Today I will walk you through tax credits and how you can take advantage of them to lower your tax liability. I know many of you are not preparing your tax returns, you just pay someone else to do it for you. But guess what? If you're well versed in these basic concepts, you will know exactly how to make the most out of the money that you pay an accountant or a CPA. And in addition to that, you will know what questions to ask. So even though you may be outsourcing your tax return preparation, knowing what tax credits are is very important in my opinion. What is a tax credit? In simple terms, tax credits reduce the amount of income tax that you owe to the federal government and state governments. Credits are generally designed to encourage or to reward a certain type of behavior that the government deems important. In most cases, credits cover expenses that you pay during the year, and they have requirements that you must satisfy before you can claim them. How do tax credits work? A tax credit is a dollar-for-dollar reduction of the income tax that you owe. Most tax credits can reduce your tax liability only until it reaches $0. But not all tax credits are created equal, and that is because a tax credit can either be refundable or non-refundable. Most tax credits are non-refundable. You still subtract both types of credits from what you owe in taxes, but there's a big difference if the credit is actually greater than the amount that you owe. With a refundable tax credit, the difference between the total amount of a tax credit and your tax liability is paid back to you as a refund. With a non-refundable tax credit, as you may have already guessed, you won't get a refund. The best you could hope for is to reduce your tax bill to $0. Let's take a quick look at an example. Let's say you owe $500 in taxes this year. If you're eligible for a $750 non-refundable tax credit, your tax bill goes down to $0, which is great, but you wouldn't receive the extra $250 as a refund. That amount is basically lost forever. But what if that $750 tax credit was a refundable tax credit? In that case, the credit would cover your whole $500 tax liability, and the remaining $250 would come back to you as a check directly from the IRS. Now, I want to talk to you about the types of tax credits. It wouldn't be an understatement to say that there are a variety of tax credits available. For example, as an incentive to protect the environment, the federal government offers a credit for the cost of purchasing solar panels to use them in your home. To help families wanting to adopt a child, the federal adoption credit can reduce your tax bill to offset some of the costs that you would pay when adopting a child. Other credits cover the expenses of child and dependent care, as well as education credits. So based on your personal circumstances, you will qualify for one or more tax credits during a year. This is when it is important to point out that even though you may be paying someone to prepare your tax return for you, it does not actually mean that they know enough about you, about your circumstances, to make sure that you take advantage of all tax breaks that you may be qualifying for. So even though you pay someone to handle your taxes, it's still in your best interest to know enough to manage that process. By now, you may be curious what tax credits are available to you. There are states that offer tax credits, not just the federal government, so I would definitely encourage you to check directly with your state. As far as popular federal tax credits go, I came up with a quick list that will hopefully be a good starting point for you to do your own research to see if you qualify for these or other tax credits based on your individual scenario. The most popular one nowadays is a child tax credit. You can receive up to $2,000 per qualifying child this year. The child tax credit is a partially refundable credit, and to qualify, a child must have a social security number, be under the age of 17 at the end of 2023, be claimed as a dependent on your tax return. I would also like to point out that only a portion of the child tax credit is refundable this year. That portion is called the additional child tax credit, and this year the refundable amount is up to $1,600 per child. Earned income tax credit is another popular tax break. Depending on your income, your filing status, and how many children you have, the credit could save you a few hundred to several $1,000s on taxes. You would have to answer very specific questions to see if you qualify, as there's not a single set of criteria. But according to the IRS, the basic rules are: to qualify for the earned income tax credit, you must have worked and earned income under $63,398. Your investments cannot exceed $11,000. You have to have a social security number. You have to be a U.S. citizen or a resident alien. You cannot have foreign income, and you cannot file a joint tax return in the year that you claim this specific credit. Those are the basic qualification rules, and there are more rules applicable to military members, to members of the clergy, and those taxpayers with disabilities. So I will link more information for you on this particular credit, and you will be able to find that information in the video description below. The third type of a popular tax credit that I will discuss today is a child and dependent care credit. If you need to pay for childcare so that you can go to work, or if you're caring for a spouse or a parent who is unable to care for themselves, you can get a bigger tax break this year. The total expenses that you may use to calculate the credit may not be more than $3,000 for one qualifying individual, or $6,000 for two or more qualifying individuals. In order to qualify, here's a set of requirements that the IRS wants you to meet. Your dependent qualifying child was under the age of 13 when the care was provided. Your spouse who was physically or mentally incapable of self-care and lived with you for more than half of the year, or an individual who was physically or mentally incapable of self-care, lived with you for more than half of the year. There are many nuances here, so if you believe that you may qualify, make sure that you take a look at the IRS information link in the video description below. It will help you out to see if your personal situation meets the IRS criteria. I hope that this quick video helped clarify what a tax credit is and how you can use it to your advantage when you file your tax return this year. Please remember to show your support both on YouTube and Rumble. It means a lot to me. Hit the subscribe button, give this video a thumbs up, and ring the bell to turn on video notifications if you don't want to miss my future videos. Have a great rest of your day, and I will see you in my new one soon. Take care.